I think the way I would sum it up, and we could certainly unpack it, is sort of bullish but cautious and more confident in their investment decisions than they've been. So over 50% bullish, which is the highest level we've seen since we launched the survey back in 2022. The same number as last quarter, actually. So bullishness has remained pretty constant. But we went from about 56% to about 66% sentiment that the market's overvalued. So you may look at those two things and go, they feel incongruent, right? Then like, hey, well, I'm bullish, but I think the market's overvalued. And I think what we're seeing here, and this ties perfectly into some of the options trading we've been talking about, is hey, I'm bullish in the long term, but we may be due for a pullback here. How do I participate in long-term bullishness and protect myself from short-term pullbacks? And obviously, as you know, there are multiple options trading strategies that can help you do exactly that.
Hello, Wealth Builders. You're listening to Wealth Building with Options. Here's your host, Dan Passarelli.
Hello, Wealth Building family. We have an excellent show planned for today because we have a very special guest. As head of trading services, our guest today is responsible for leading the end-to-end client experience for traders at Schwab, including overseeing the award-winning Think or Swim suite of trading platforms. He has more than 25 years of experience in the financial services industry and has spent the bulk of those years with TD Ameritrade in leadership roles across its retail, technology, and active trader businesses. He's a board member and former president of the Wall Street Technology Association, previously sat on the FINRA Technology Advisory Committee, and is a graduate of the SIFMA Securities Institute program at Wharton. He holds a bachelor's degree in business administration from Rutgers University, and to boot, Series 4, 7, 24, and 63 licenses. Please welcome James Kostulias. James, how are you today?
Hey, Dan, thanks so much for having me. I'm doing fantastic today. It's really good to be here with you to chat about one of my favorite topics of options. I'm super excited.
Yes. And geez, Louise, what better platform than Thinkorswim for options, huh? So yeah, you are definitely the man to be talking to about this stuff. Holy cow.
I really appreciate that. And we're definitely proud of the Thinkorswim platform. The team is amazing. I'm humbled to be here representing them. They do some fantastic work. And I know we're going to talk about another topic near and dear to your heart, as well as the platform, which is education, which is another area we believe so strongly in here at Schwab, and especially in Schwab Trading.
Yes, that sure is some important stuff. So you've been with TD and Schwab now for a long time, creating great trading experiences for clients and trading services, 23 years, as I understand it. What drives that passion, man? What keeps you going?
Yeah, I think a few things I would say to that. One, I would be the markets are so dynamic and ever changing. And so it's really hard to get bored or in a rut when you're involved in the markets every day. And I think seeing clients evolve over the course of the last 23 years, and specifically within the option space of how clients think about options, how they use options, and sort of that evolution of back when I started in the late 90s, and options were a little bit of a taboo topic, right? You got that characteristics and risks of standardized options trading booklet. And I think there was a lot of fear, honestly, around the product and the riskiness of the product. But watching clients in the industry evolve to a place where we talk so much about options as a risk management tool as opposed to just a speculation tool, it's been amazing to be along for that ride. And honestly, it's been humbling to be at the forefront of that experience of helping to educate clients to understand how they can use those products. And so the dynamic nature of the markets, the evolution of the retail client, keeps me passionate and gets me up out of bed every single day, looking forward to doing things to help our clients grow in their and get more secure in their financial lives.
Yeah, man, it has been, I mean, there's been a lot of changes in that time. So, from your perspective, on the front lines, helping clients with the largest options brokerage firm there is, and in charge of all the things you're in charge of, from your perspective, what has changed among retail traders in that time? Are they trading more, using options more? Has their level of sophistication changed? Tell me all about that.
Yeah, well, I think the answer to your question to start is sort of a combination of all of the above. We absolutely see in aggregate massive growth in the overall sort of options business, not just at Schwab, but the industry as a whole, right? And that's been talked about a lot. It's been talked about on your podcast, your family of podcasts for sure. So I don't think I'm breaking any inside information with that. At Schwab, we see a few things. We see the continued evolution of the retail client to think about risk management a little bit differently maybe than they did, right? And so maybe I would sort of talk a little bit about sort of the continuum we see. And so oftentimes clients who come to us will start off with basic equity trading, right? And then as they consume more education, as they interact with our platforms, and especially if they interact with the Thinkorswim platform, we try to present a lot of things for them to ultimately look at and think about. And maybe they jump on a webcast where we do 35 plus live hours a week of content, new content for our clients. And maybe it's the basics of technical analysis for a stock trader. But then maybe after that, it's the basics of sort of options and how to think about a simple option strategy, or maybe something like a covered call or a married put. But clients will sort of often get started with a basic long option trade. I think there are a few reasons for that. One, it's a one leg and it's sort of simple. Two, it may be consuming the least amount of capital for them. We do see bigger accounts that start in the options world often start with a covered call as their first trade. They probably have a more established portfolio and are looking to either generate some income or maybe protect a stock position or an equity position they have. And then I think we see that evolution along that continuum from long options and covered calls. Maybe they're doing some stock replacement strategy with options early on, A, to be more efficient with capital, or B, maybe to mitigate a little bit of risk. Cash secured puts is another one that typically is a little bit early on in the process for clients to ultimately start with there. And then they move up into the world of spreads. And I think when we talk about our education, Dan, we focus a lot of our time and energy on the spreads diagonals and for clients to think about high probability defined risk trading. And that's really the sweet spot for us education wise. But it oftentimes takes clients some time to sort of move up into that continuum. And they may even go past that and they may get into the world of futures and portfolio margin and different kinds of cross asset hedging. But we sort of think about that defined risk, high probability trading area as a real sweet spot for us.
Wow, man. I don't know if you know this, but in the past, I worked very closely with the education team back when it was TD Ameritrade.
I do know that. And they had some nice things to say. As I told them I was coming on with you today, they had a lot of those folks are still here doing an amazing job leading the business. And they had high praise for you, sir. So we appreciate that.
Uh, and so, man, you guys still like you do 35 hours a week, you said?
So we do 35 hours a week, 30 to 35 hours, depending upon the week of live webinars, digitally administered. We've got courses, we've got articles, we've got classes people can take that are canned sort of in a library. So you can take those on demand as you want. And the other place we lean into that I know you know are the live events, which we do about 22, 24, depending upon the year. We'll do about 24 or so live events where we'll bring from a few hundred people up to we hit our record. We almost hit 1,000 folks live in Texas about a month or so ago. Everything's bigger in Texas, Dan, as we know. And so we were close to 1,000 people, and they'll come and they'll bring their laptops and they'll sit down and they'll integrate with each other as a form of a community, and we'll present to them on things like the Thinkorswim platform and the basics of options trading to some more advanced strategies. And the growth we have seen there has been phenomenal. And I'll tell you something else that I think would be interesting to this audience would be back at Ameritrade, as you referenced, we did the same types of events, a little bit of a smaller scale, and definitely more trader focused. And so we would have had probably somewhere around 90% of the attendees at those live events we would segment as traders. What we're seeing now after the Ameritrade Schwab integration, that mega event we did in Dallas was almost 50-50, almost half what we would consider traders and half what we would consider investors. And I think that speaks to an interest in, and options is a big, big part of that, an interest in, hey, I consider myself a long-term investor, not an active trader, but there are option strategies, as you well know, that I could use to generate income or minimize risk in my portfolio. And I'd really like to understand more about that. And so that desire to understand some of the ways to generate or protect wealth in your portfolio for your non-active traders is a real growing area for us and one that I find really, really interesting.
Wow, man. Yeah, that is interesting. That's surprising about the 50-50 breakdown.
Yeah, right. I was surprised too. That's been steadily rising. Some events will see more like 35-65, 40-60, but to have our biggest event and get just a crack below 50-50 was really interesting to me. Wouldn't be surprised next year if we do an event that's actually more investors than traders, which is really an evolution that we've seen happening sort of over the course of the last 15 to 18 months.
Wow, wow. And correct me if I'm wrong, a lot of that is free education, or is it all free?
Yeah, I won't correct you often. I apologize. I apologize. It's not a lot. It's all. We don't charge for any of those modalities or any of those mediums, and we do that because we think it's a really important to our clients as a means of helping them continue to grow as an investor, as a trader, and build that long-term wealth that we are so focused on. And so we don't charge for any of it.
Wow, wow. That's pretty darn amazing, man. Quite an investment in your clients.
Yeah. And look, to us, it's an example of really win-win. It's so helpful for clients, and we get emails, and the team gets them, and I'll get them occasionally from clients who will say, wow, this was legitimately an eye-opening experience, and in some cases, life-changing type of experience for me to understand some things I didn't understand. Like maybe I was taking on some risk in my portfolio I didn't even realize, or I had the ability to generate income off of a portfolio I already had. And from my perspective, that's the definition of win-win. It's great for clients, but it's also great for Schwab. It's going to keep clients engaged here. It's going to keep them here longer. It's a big part of our value proposition and a reason they want to be here. And oftentimes with the really high event net promoter score events like that, they're going to tell their friends and they're going to tell others about it. And in a lot of cases, we get clients who will want to bring a friend to one of those events, and we get the opportunity to talk to them about all the great stuff that Schwab can do for them in their financial lives.
Wow, 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 wow. So, all right. So, James, I don't know how much of this you'd be willing to share,
Hmm?
but I'm often asked about what kind of, and you talked a little bit about this already, but what kind of strategies most, well, I'll say traders in the broad sense, people who execute trades. So it could be traders that are,
Traders and investors. Traders and investors. Yep, that's great.
yeah, yeah. So what kind of strategies are typically used? Do you have a breakdown?
Yeah, so we don't provide sort of the public breakdowns of it, but let me give you a little bit of sort of context around that, where I would say the new to options clients will often start with long options. And that's often where they'll start. And again, some of that is because of the lower capital requirements associated with that and sort of some of the simplicity of a simple single-legged option trade. As they move up the continuum, we quickly get into the world of cash covered puts and covered calls as easy to understand strategies that have benefits both to the trader and to the investor. And so I think that's an important sort of piece of it. And then again, as they evolve up that continuum and take more of our education, those spread-based strategies become more and more applicable and more interesting to that set of clients. And then obviously, as you go further up the continuum, you will have clients who are doing more naked shorting and some of the other things, but we'll generally sort of see it along that continuum. And I would just say as we talk to clients about just making sure that they understand their risk, one of the things to unpack, I think, still a little bit further, Dan, is that idea that sort of the option traders are more of your risk takers and sort of more of your cowboys and cowgirls, that they would have a little bit of that reputation, if you will. But we see so many of our clients who are actually using options to mitigate risk in their portfolios. And even when you talk about something or to generate income, quite frankly. And as you talk about the world of zero DTEs, which I know gets a lot of conversation on it, I think there's obviously a lot of clients, not just at Schwab, but across the world of options trading. They're using those for speculation, but there are a lot of them that are using them to hedge risk in their portfolio. And so we see a lot of that. And now with what we're seeing where the VIX has been pretty stable here since April, right? And in some cases at near historic lows. But we see pockets of volatility in certain sectors, right? We see pockets of volatility with certain specific names where you've had huge run-ups in mega cap stocks over the course of the last couple of weeks, whether it be AMD, whether it be Oracle, right? But mega cap stocks having huge run-ups. The ability to use options to hedge some risk on some of those if you're short, obviously, as an example, or to just actually help you just sort of manage your portfolio a little bit better. We continue to see more and more clients interested in options trading. And so I could give you one example that might help as well. If you go back sort of 2 years, we would have seen roughly 1 out of 5 of our new traders get into the world of complex options within their first year. So that's back to that sort of continuum that I talked a little bit about. When we look at those numbers now, we see that 1 in 3 as opposed to 1 in 5. So a pretty big increase there in clients who are engaging in either more frequent option trading or complex option trading within their first year. And I think that talks a lot to the sophistication of clients. I think it talks a lot to market conditions where we have right now, where options are such an important tool to help them try to achieve their financial goals, either by managing risk or trying to maybe generate income in a time when vol is not that high. And so we're definitely in a place where the interest in options and the interest in some of the more complex option strategies continues to grow.
Okay, so you said something interesting there. I want to see if I heard you correctly. Did you say that, well, basically, I wanted to know what percentage of accounts at Schwab are eligible to trade options versus just stocks? Did you say 1 out of 3 or?
I didn't quote that. That's not a number we share publicly,
Oh, okay.
primarily because there's so much. The options approval process is so important and has so much sort of complexity and nuance to it. We don't disclose those numbers publicly. We do have a very rigorous process where we'll evaluate a client's investment objectives, risk tolerance, finances, all of that to ultimately qualify them for a specific level of options trading. What I will tell you is the overall interest in options trading continues to grow pretty strongly here over the course of the last couple of years. And so we continue to see more and more clients want to engage in options, but we don't give that specific stat. The stat I did quote, the 1 in 3 versus 1 in 5, are clients who we see engaging in the more complex option strategies within a quicker period of time from becoming a Schwab client.
Yeah, yeah. Okay, makes sense. Makes sense. So, can you speak to Schwab's recently released Q4 trader sentiment survey data? What are
Yeah.
some of the key takeaway? Because I think you compiled it, right? What
The
are
team
some?
does a great job with that. I can absolutely talk to it. I think the way I would sum it up, and we could certainly unpack it, is sort of bullish but cautious and more confident in their investment decisions than they've been. So over 50% bullish, which is the highest level we've seen since we launched the survey back in 2022. The same number as last quarter, actually. So bullishness has remained pretty constant. But we went from about 56% to about 66% sentiment that the market's overvalued. So you may look at those two things and go, they feel incongruent, right? Then like, hey, well, I'm bullish, but I think the market's overvalued. And I think what we're seeing here, and this ties perfectly into some of the options trading we've been talking about, is hey, I'm bullish in the long term, but we may be due for a pullback here. How do I participate in long-term bullishness and protect myself from short-term pullbacks? And obviously, as you know, there are multiple options trading strategies that can help you do exactly that. And so in some cases, we're seeing stock replacement strategies, leveraging options to say, I want to limit my risk on the downside if there is going to be a material pullback, but I want to participate in the upside because overall I am bullish in the long term. Using some other hedging strategies that they may want to deploy in their portfolio to say, hey, look, I'm bullish. I don't want to sell, but I'm going to write some calls here. And if we get it, I'm going to collect that premium. If we get a little bit of a downturn, that'll cover me there. And so I think cautious but bullish is a great place to be, especially for the option trader who has multiple ways to do it, right? It's a way more nuanced story than I'm bullish or bearish. Should I buy more stock? Should I sell the stock I own? How do I actually trade in an environment where I'm bullish but cautious? And then I think the confidence piece, that 70% confidence, I think that comes back to confidence is grown through competence. And I think the consumption of the education, as we talked about, that the clients having seen what they saw in April and having managed their portfolios through that, we're seeing a lot of dip buying from clients and traders, and they've been rewarded for that dip buying, right? I mean, ever since April, obviously. And so I think as they've seen some of these evolving market conditions, as they consume more education, as they get more comfortable on the Thinkorswim platform, as they leverage the risk management tools within the platform, they're feeling more confident about their decisions, even though they're sort of mixed on this. I'm bullish, but I feel the market may be overvalued in the short term, if that makes sense.
Yeah, at first it seems like it might not make sense, but yeah, it's very, very interesting stuff.
Yeah, it feels like a contradiction, right? And then just some of the bigger risks that they see, right? The fear of stagflation, they're definitely worried about that. You still have some concerns about policy in Washington. I think a combination of a bit of the government shutdown as we get to a full month now of government shutdown, and when might that start to have some impact? Largely, the market has sort of been a bit immune to it, to be quite honest, but you still have some of the lingering fears of tariffs, and some of that seems to be coming out in the wash here as the U.S. and China work through some of the bigger issues that it seems like they're working through. But there's definitely a little bit of a lingering on the tariff side and the government shutdown. So there are reasons to be a bit cautious, but I think overall that's overshadowed a bit by some bullishness, certainly with the AI trade that we sort of see everywhere and anywhere. But also, I would tell you, in the AI space, when we look at some specific names, we dig into that a bit, and we absolutely see, again, options trading being an important component of how our clients are putting on AI trades. And so it's not just a pour into the Mag 7 and we're hoping things are going to pop here. It is a more cautious. We see more stock replacement than we had in the past using options. And we see more hedging activities around some of the long positions that clients own. And so I think that's another example of how you can be bullish on AI, certainly in the intermediate and long term, even if you're a little bit cautious right now in the short term.
Interesting, interesting. And you've got some data on inflation expectations and that kind of thing as well, which are pretty interesting too.
Yeah, and I think, that gets at that sort of stagflation point where I don't think people are sort of have set their mind as to the full beliefs on inflation. And I think obviously we had a Fed meeting this week and we had some comments from Chair Powell that maybe indicated rates might not be cut as fast as people had thought. And so I think there's just a lot of digesting of all of that to sort of try to understand what they think the implications are going to be. And again, I come back to when you're not sure and when you're not certain, hedging is a great way to deal with that, as opposed to an all-in decision to go all in and all out, which all roads are leading back to different strategies, leveraging options to help you manage that uncertainty risk, Dan.
And people can find the write-up on this on the Schwab website then?
Yep. You can absolutely go to the Schwab website and we release the quarterly trader sentiment survey. We also put out something monthly called the Stacks, which is the Schwab Trading Activity Index, which the sentiment survey gets at what clients are thinking and feeling their sentiment. The Stacks looks at their actual trading behaviors and gives you insights into what the Schwab clients are actually doing in terms of buying and selling. So All that's available on schwab.com. And if you put that together, being the leading trading firm on the street, we just finished our third consecutive quarter at over 7 million trades a day and the leader in options trading from a market share perspective. Those insights about what our clients are doing are really interesting. And I like to put together the sentiment to see where it aligns with their trading behaviors and sometimes where it's a little bit different. So, like, you might hear that they're a little bit bearish on a sector, and then you'll see, though, the trading activity actually indicates they're buying. Some of that is timing, right? And the dynamic nature of timing, which we see. And if I go back to middle of October, where we saw that volatility spike with some of the tariff turmoil around China on the 10th versus the 13th, so the Friday to the Monday, we had the huge down day on the 10th. Our clients were hardcore net buyers on the 10th. So the market was tanking, and you would assume sort of the other way. And that gets back to the buy the dip sort of scenario we've talked a little bit about. And then when we saw almost an immediate recovery, there was some news out from Washington, and Secretary Bessent and others had talked about, hey, we think we're working through the situation in China. The market popped up a lot. We saw not a lot of net selling from our clients at that time. So it's really interesting when you put the activity together with the sentiment to see where they mesh and where they may give you sort of a little bit of a different insight because the data conflicts.
Man, that's very, very interesting stuff. So I'm thinking about these things, the survey and what you just said here from what traders might be doing, what investors might be doing. And you were talking about earlier how things are leaning more towards investors as far as people attending some of the educational events. I mean, how important is it for somebody to differentiate for themselves? Hey, I am a trader or I am an investor.
Yeah. In my humble opinion, it's not as important at all. And I think we do it from a Schwab perspective because we're trying to provide them with as much help and the best possible levels of service we can. And so we've got over 1,000 trading professionals on our trade desk that, depending upon what type of help you're looking for, you may want to speak to. If you've got a question about an options trade, as an example, or you're trying to understand something maybe with the usage of margin, or you want to understand the advantages of more advanced trading products like futures, we're going to want to put you in front of one of those trading professionals. If you're a long-term investor and you've got questions about some of your basic account or your overall sort of asset allocation, we've got teams that are fantastic to ultimately help you with that. So for us, it's important that we segregate so that we can get you to the right place at the right time, offering 24/7 service. From my perspective, whether you identify as a trader or you identify as an investor, not an issue at all. And I wouldn't, if I were a client, I wouldn't spend any time thinking about it. I'll just share an anecdote with you that I found sort of funny. I was having a conversation with one of our traders who was a big put writer, and they were writing a lot of puts, and they were collecting the premium, and then they were doing it on stocks that they'd be happy to own at a price below the market where it is today, right? Which is not kind of put writing basics 101. And I had talked to them about that, and they were talking about some of the education that they had consumed that helped them understand the risks and benefits of this strategy. And I said, well, that makes all the sense. And, as a trader at Schwab, I was just checking in to make sure, whatever. And they were like, what do you mean a trader? I don't consider myself a trader. I'm an investor. This is what I'm doing. And I said, oh, okay, cool. That wasn't in any way meant to have a connotation to it. By our segmentation, you are a trader. They consider themselves an investor. And I've talked to clients who are the other way. They wouldn't segment trader at Schwab by our definitions, but to them, they're a trader. They're watching the markets every day. They may not be transacting every day, but they're watching the markets every day and they're into it. And so, from my perspective, how clients sort of self-designate, not an issue at all. And the beauty of Schwab is we've got everything along the continuum from your most basic investor to your most ultra sophisticated trader and anywhere in between.
Yeah, interesting, interesting. I read something that you wrote recently on the much discussed move towards what some call 24/5 trading.
Yeah.
Yeah, that's when the markets are basically open 24 hours a day, 5 days a week. And it seemed to me that you see some benefits for 24/5 trading, but also some drawbacks. Can you share your thoughts for our listeners on that?
Yeah, I'd be happy to. I think from a benefit perspective, we live in such a dynamic world. There's news coming out all the time, especially recently. There's been a lot in the geopolitical space. There's been a lot with tariffs. In the 27 years now I've been on Wall Street, like we never talked about tariffs, right? Until sort of really recently. But because of the global implications of tariffs, a lot of that news would break outside of traditional market hours, and clients would want an opportunity to either get into close a position, get into open a position, et cetera, et cetera. So I think one of the benefits is it's a great tool in the toolbox to have when you need it. Right. And I think that's a lot of what we see with our 24/5 trading book, which is it's episodic. We'll see a steady usage of it, steady amount of trading in that window. And then we'll see a big jump when there's big news on the political front, the geopolitical front, et cetera, et cetera. When there was some of the tensions and turmoil in the Middle East, you'll see big uses of it for oil trading and things like that. And so I think that's a huge benefit. I think one of the drawbacks that I talked about in the piece I wrote was I think this idea that you need to be on as a trader 24 hours a day, 5 days a week, or else you might miss an opportunity to seek some alpha, or you might miss an opportunity to get out of a position you should have gotten out of. I think that can be a little bit of a dangerous mindset for folks. And I think we've seen that across the board with some of the things you've seen in the crypto space, right? Where crypto trades not 24/5, but 24/7. And you saw it on October 11th a bit with the sort of crypto flash crash that we saw on October 11th. And I think there needs to be an understanding from traders like it's impossible to be on all the time. And I think people need to realize that. I think our clients have done a nice job of using it as a tool in their toolbox without sort of the expectations that the trading day is now going to be 24 hours a day, 5 days a week. The one difference I would highlight from our clients, though, is our international clients who like that 24/5 window because it's at much more normal times for them. And they are using it more as a trading window for them to trade the US markets. And so we see more steady usage from our international clients and a bit more episodic usage from our US clients, which to me is actually healthy. And I said this, like if you feel the need to trade a mega cap stock from midnight to 5 a.m. A, there are some other products you can use to do that, but B, that's a lot of pressure. That's a lot of pressure to put yourself under.
Yeah. Yeah. So we here on the show love new trading tools.
Yeah.
Is there anything you're working on now at Schwab that's particularly interesting that you'd like to share with the Wealth Building with Options family?
Yeah, so we are constantly evolving our trading platform. So whether that be the Thinkorswim suite, the desktop download, the web-based application, the mobile app, Schwab.com and Schwab Mobile, which are all places you can trade. You can trade options and through all of those different outlets. We're constantly taking in feedback from our clients and looking to ultimately evolve those platforms and just continue to make them better. And I think we're rewarded for doing that from our clients and from a lot of the industry accolades who love our platform. I'll give you a couple areas that we're working on right now. One of them shouldn't be a surprise, which is the crypto space. And so we're working to launch spot crypto trading in the first half of next year. And that will be available via the Thinkorswim suite of platforms and Schwab.com and Schwab Mobile. And so that is something that we're working on. But let me give you the couple in sort of your space more where your options audience would like a bit more. As we look at, we talked about 24/5, so great segue. A bit of the proliferation of options trading. You've got the CBOE looking to expand the options trading day, an hour in the morning, 15 minutes in the afternoon. There's some things to do to make sure we're able to do that in the best way for our clients. And so we're working to make sure that we're ready to support that. Ultimately, they've talked about products moving into that 24/5 window and then that 24/7 window. That gets into some interesting questions with options as you start to think about expiration cycles and how all that's going to work. And so we're working through that to make sure we're at the forefront of being able to offer that. And then you've got single stock zero DTEs that there's been a lot of conversations about, and it looks like sort of sometime in the Q1 window. And we want to make sure we're ready for those. And again, we want to make sure it's in what we call the Schwab way. So the platforms are fully ready for it. The risk management tools are fully ready for it, the client facing ones. And also the education is there for clients to understand some of the unique risks, especially the gamma risk associated with your zero DTEs. And so we're spending a lot of time to be ready for all that. It's going to be an exciting year in 2026 for sure.
Yeah, sounds like it. Holy cow. Well, before we go, if you could suggest just one thing for option traders or investors to focus on, one skill or strength or attribute, what would it be?
Yeah, what a really, really good question. And I think where I would go would be back to where we started. So everything comes full circle. Nice job doing that, Dan. That was impressive. The markets are so dynamic. I think what I try to tell traders and investors are the more you learn and you want to learn, the more curious you are and the more you want to understand. I think one of the areas of risk I see for some clients are certain strategies work incredibly well in certain markets and work incredibly poorly in other markets. And so, are you doing enough to make sure you understand that and you are dynamic in the way you are ultimately trading, right? And so obviously you've got the basics of bull markets and bear markets. I get it. But you've got markets with high volatility and low volatility. You've got the sideways markets. And I think it's just really important. Our sophisticated option traders, of which we have a lot, really know and understand that, right? And they're able to adapt and they're able to pivot their strategies based on the market conditions. Where I get a little nervous is the clients who look at a strategy and think, hey, this is a great strategy. This is sort of my strategy. Great, I'm going to go with this strategy. That strategy works great in this type of market, may not work, probably won't work actually in another type of market. And so I think the biggest thing I could tell our options traders and investors are just make sure you're paying attention to the dynamic nature of the market and you're being adaptable and you're being flexible. You're seeking to understand education and everything else around what you should be thinking of as market conditions change. We saw that in April, right? We saw that in April with the huge influx in volatility. And we saw a lot of traders adapt to that, which was fantastic. And I think if you're up to continually learning and continually adapting, you're going to fare well as the markets move. If you're stuck and rigid in your ways, I think that's where you bring a lot of risk to yourself and your portfolio.
James, thank you so much for sharing your time and knowledge and insight with the Wealth Building with Options family. Thank you so much.
It's been a pleasure, Dan. Thank you so much for having me. Look forward to talking to you again.
All right, James Kostulias, everyone. And that about wraps it up for this show. But before you go, please make sure that you're subscribed to Wealth Building with Options on your favorite podcast platform, whether it's Spotify, Apple Podcasts, or whatever it may be. And if you would be so kind as to leave a comment, I would surely appreciate it. I would love to hear your thoughts and what you'd like to hear us talk about. Until next time, invest excellently.
Options involve risk and are not suitable for all investors. Before buying or selling an option, read characteristics and risks of standardized options. A link is provided in the show notes. To learn more about your host, Dan Passarelli, please visit markettaker.com.